Welcome to the College Investor Audio Show, where we talk about the biggest issues impacting millennial money, from student loan debt to side hustles to building wealth. We will show you how to get out of debt so that you can build real wealth for the future.
Hello and welcome to the College Investor Audio Show. So glad you're a part of this today. Today we're talking about how to invest in silver. We're going to get to that in just 1 minute, but I wanted to talk to you about a really awesome sponsor today. We can't do what we do on the scale that we do it without some amazing sponsors. So, if you're listening to today's episode, chances are you enjoy investing and you care about what you're investing in. Maybe you've heard us talk about SRI or ESG. And just in case you aren't familiar, SRI is socially responsible investing, and ESG stands for environmental impact, social impact, and corporate governance. Anyway, so these philosophies have been growing on investors as they want to build wealth without compromising their beliefs or morals. Makes sense? If this type of investing style interests you, you need to check out M1 Finance. So M1 was recently named a top robo-advisor for socially responsible investing by Investopedia. And we've been huge fans of them for years. Plus, they're currently offering some huge bonus offers to transfer your account to them, up to $3,500. Think about the kind of investing for good you can do with that chunk of change. Check out M1 Finance at thecollegeinvestor.com/M1. It's thecollegeinvestor.com/M1. Now let's talk about silver. So silver is a store of value and is intrinsically a different type of investment compared to stocks, equities. A stock represents the value of a company and can go to zero. Silver represents the value of a commodity and can't go to zero, as it will always have at least some value. So today, we look at a few different ways to invest in silver and some things to think about. Futures and options. Investing in silver through futures and options is a more advanced technique than some of the others we'll talk about. Your brokerage account will need to be approved for trading futures and options. Of course, you can invest in futures or options. You don't have to invest in both. Futures are contracts that trade at the spot price for silver. The spot price is what the going rate for some weight of silver is at that time. Usually, spot is based on 1 ounce of silver. Trading futures is the closest you can get to the actual price of silver. A futures contract allows you to speculate on the price of silver or take delivery of physical silver. If you let the futures contract expire, you'll have to take delivery. For most people, they avoid delivery by selling their contracts before they expire. Futures and options use more leverage than stocks and ETFs. You have to be very careful when trading these leverage instruments. Silver-based options contracts are derivatives on silver ETFs. Silver futures options contracts are derivatives on the silver futures contract. Especially for futures options, you are traded a leveraged instrument on a leveraged instrument. With silver ETF options, they can expire worthless, but the investor doesn't take delivery of silver in that case. They simply lose their investment. ETFs. So, ETFs are one of the most popular methods for investing in silver. There's no special brokerage approval to invest in a silver ETF. Investing in an ETF is the same as investing in a stock. You simply buy some ETF shares, and now you have a silver position. SLV is what most people will buy when investing or trading a silver ETF. Note that unlike a stock, ETFs have an expense ratio. The expense ratio for SLV is 0.5%. An expense ratio is a fee charged to investors by an investment company for managing the ETF. By investing in SLV, investors have to worry about taking delivery of silver until they hit 50,000 shares. For most, this isn't ever going to present a problem. Commodity ETF tax consequences. Commodity ETFs have some special tax consequences that should be taken into consideration. SLV falls into the commodity ETF category. SLV is backed by real silver, which is a commodity. The IRS treats taxation on SLV as if you were holding real silver. When selling an ETF, that you've held for over a year, you'd expect to pay long-term capital gains taxes, which actually max out at 20%. However, commodity ETFs are taxed the same as collectibles. For SLV, the maximum long-term capital gains rate is 28% instead of 20%. If the 3.8% net investment income tax, NIIT, applies, that's a total of 31.8%. People with lower incomes won't be taxed this high and in some cases actually might not be taxed at all. To find out how much you'll be taxed or taxed at all, check the Schedule K-1 or Form 1099 that you receive from your broker. Taxes are a complex topic. Since each person's situation is completely different, it's best to work with your tax advisor, CPA, to determine your taxes due on any ETF. Silver miners. Silver miners allow you to gain exposure to silver indirectly. It's a more risky investment than investing in SLV. Silver miners are a business, which adds another level of complexity and risk on top of investing in silver. Additionally, that business is tied to the performance of silver. If the silver price goes down, silver miners will also go down. This isn't a one-to-one relation, though. Silver might go down by 10%, while miners may go down by 20%. SIL is an ETF that invests in silver miners. SILJ invests in junior silver miners, which are riskier than silver miners. You can also invest in the individual silver mining stocks, which is riskier than investing in a silver mining ETF. The ETF spreads risk across several companies, while investing in individual miners doesn't provide any diversification. Beware. When buying silver miner ETFs, there's no delivery of silver to worry about. Bullion. Bullion is a physical silver in the form of coins, bars, or ingots. Now, bullion has a high concentration of silver. There are a couple of ways to buy bullion silver. Some local coin, pawn, or jewelry shops sell silver bullion. You can also purchase from online sellers of bullion, although this will incur sometimes expensive shipping costs, as you can imagine. Silver bullion is usually marked with symbols such as sterling, 92.5% silver, or 0.9999. These markings help authenticate the silver. The 0.9999 means that the bullion is 99.99% silver. Investing in silver is a great way to diversify a portfolio. There are many ways to invest in silver too, and the one you choose? Totally a personal choice. There isn't a right or wrong choice. It just comes down to the investment method you are most comfortable with. And that's all we have for today. You can find out more about this article and so much more at thecollegeinvestor.com. And don't forget about the M1 finance deal we mentioned earlier. That's thecollegeinvestor.com/M1 to get started there too. Thanks again, and we'll talk to you again real soon.